So what I have here is the Atlas line, okay? And I use the average true range to tell me what the current market conditions are. I'm not really concerned about the way the line looks, right? Hey Mike, the contract doesn't shut down on Monday. It goes on for another month or so, but the volume, the liquidity just gets less and less and less. So it doesn't shut down if you're still trading the contract, the Thursday or the September contract, Mike. It doesn't automatically just stop trading. It's about a month or so. It still lasts, even longer than that, but it just gets less and less liquidity and less volume, okay? All right. So let's take a look at what's happening right here. This is what you see here is the E-mini S&P. I have the Atlas line on. This is how the Atlas line works. This double bar short order that you see here, it occurs because we had 2 consecutive closings below the Atlas line. So as soon as this occurs, it's my reason to go short. Okay? So I have a reason to go short here. 2 consecutive candles as soon as the Atlas line starts plotting to go short. I look at the ATR. The ATR is looking pretty high here. It's at this time about 4 points, 4.25 points. And so I use this as a measure of how much profit I should take. And so the entry price here of 1169.50, 1169.50, and you want to go for 4 points, which is 1164.50. Sorry, 1165.50. So your profit target is 1165.50 right here.
Order pending. Order filled.
All right, so let's see what happens here with this. All right, going for a little bit more profit than this. We're going to 1165.50 here. All right, keep this out of the way here. All right, now if you look at what the Atlas line can do, it could also take trades overnight. Okay, so it could also take trades overnight. All right, and so if you're looking at an overnight Atlas line here, let me add another Atlas line to my chart here. And some of you trade currency, some of you are international, and so here is the Atlas line right here, and I am going to put it for not 9:30, but for 3 o'clock in the morning when the Life Exchange opens. All right. And so here we have an Atlas line overnight. Okay? And so an Atlas line overnight is a long order here, right? I had 2 orders to go long, and then we had the order to go short here. We had 1, 2 consecutive candles to go short. This is an overnight on the E-mini. All right? Now I'm sleeping when the E-mini is trading, so I'm not really playing these overnight moves. I like to trade the pit session where we have more volatility, more liquidity. All right, but you can trade currencies overnight as well. All right. Questions? All right. Here is yesterday's pit session right here. 1192.75. My ATR was about 2.5. I made my 2.5 points there. Let's just take a look here. 3. And so 1192.75, 1188. You made your 3 points there based on the ATR. All right. Now, after you made here the 3.5 points long, there's your double bar long entry to go long on the Atlas line. I look down at my ATR again. My ATR is about 3 again. Right here, 3.25. So I know that I'm able to get my um, 3 points. You can go for more. I don't go for more. I go for just the ATR because I want to be consistent and I want to follow the rules as they are meant to be. All right. And so use the ATR, the average true range. It will tell you if the market's moving fast, if the market's moving slow, if the market is untradeable, where it's chaotic. All right. Any questions, guys? All right, very good. All right, now, you want to take a look at the day before yesterday? Actually, this is, 9/8. Here's overnight on the E-mini. Short, long. Okay. That's overnight on the E-mini yesterday. You look at the day before that. Long. And then you had all of these pullbacks. And actually, I have a couple of videos on trades that I took based on this here. There, right there, right there. And that's September 7th. All right. Where we're at right now, let's take a look. This is where I'm at right now here. Okay. I use a parameter of 4, Victor, on the ATR. Okay. All right. I don't want to make this into a trading session. It's not the point. The point is for a little education. Okay. So I'm not going to just stare at this thing and do nothing. So I'm going to get out of this here. And
Target filled.
all right, guys. So I'm out of the trade. Maybe a little bit premature, but I'm out of the trade. All right. Maybe I should have waited for this thing. Can't trade and teach. Can do one at a time. All right. So there you go, guys. All right. Sheldon, when do you get your double bar short or long? What determines the entry price? Excellent question, Sheldon. Let me post this question here, Sheldon, in the room. Okay, so the question here was, and I was trying to copy and paste here a couple of questions here. Question here from Victor. On the ATR on the 5-minute chart, it's any chart. It doesn't matter if it's 5-minute, Victor. J, it is a parameter 4. Sheldon says here, when you get a double bar short or double bar long, what determines the entry price? It is the closing price, Guy. It's the closing price that determines the price, the closing price. So, as an example, if you look at any of the entries on the double bar short or the bounce trades, because it provides you a couple different, the Atlas line is software that gives you a couple of different trade entries, not just double bar short. It is the closing price. So this is candle number 1, and this is candle number 2, and therefore the closing price of this second candle is this price, 1169.50. That's your entry. So as soon as this second candle posts, and as soon as it posts, and as soon as it, you don't need, you know the entry. It's the closing price. As soon as it posts, you go short, 1169.50. I waited a little bit to go short. I got in 1169, but I should have followed the rules. 1169.50 is right there. That's right. Hi, John Paul. New to Day Trade to Win. On the Atlas line, is the Atlas line an evolving indicator that moves via price action? Can you elaborate how the Atlas line plots? The Atlas line is not based on any type of moving average, stochastic. It doesn't have any indicator attached to it. As a matter of fact, if you look at the Atlas line on the back here, and you look at the parameters that are here, The only parameters that are here are the trade bounces. I have it set to off right now. The trade crosses I have set to false, and I'm only showing you guys the trade double closes entries. Right, double bar short I have set to true. So you can turn these on or off as you see fit. And during the webinar, to everyone who purchases the Atlas line, I do a one-on-one webinar just to make sure that you're clear on how these orders work and how to trade them in the markets that you want to trade. But there's no specific parameter attached to the Atlas line. So, a lot of indicators, they're linked to an EMA, or they're linked to a stochastic, or they're linked to an MACD or something. Nothing is linked to the Atlas line. It's based solely on price, on the market that you traded and where the market has been, where the market has been previous to that, and it starts calculating how the angle is going to be into the future. All right, so it doesn't have any attachment to any conventional indicator whatsoever. It's based solely on the price of the market that it's currently calculated on, just the price. All right, and it takes both into consideration time and price. It does not look at Fibonacci's, channels, volume, nothing like that. And so it's a pretty complicated calculation that I created 5-6 years ago to be not to be used for the public. But all right, Major Mongo. What makes the Atlas line? The overnight Atlas line looks like a separate line from the daily and not continuous. No, it is not a continuous line, Mike. And so you can add as many Atlas lines as you want here. But I only prefer to have the 9:30 and the 3 o'clock, which is when London exchange opens. And those of you who trade in the Asian markets, you have to, if you want to trade an Asian market, you have to place it for when the Asian market opens for you in your time zone. So whatever that may be. All right. So the Atlas line is separate for pit session and for overnight. Okay. Here's yesterday. 2 winners yesterday. I try to do as many videos as possible, but yesterday I just didn't have a chance to do video and record it and trade it. So I do what I can when it comes to the videos. Here is overnight Atlas line. Here is the pit session on September 7th. Here's the overnight session. You can see that the Atlas line acts as support as well and resistance. Both of these trades were good trades. Here is September 6th, another winning trade. Price never closed below the Atlas line. Never. Here's my saying. If it's above the Atlas line, you want to go long. If it's below the Atlas line, you can go short. No reason for me to go short whatsoever at all. All right. Here is overnight on the Atlas line. We had a short. We had a long. Neither of these really turned out to anything. And finally collapsed. Okay, an overnight. Here is Monday. I believe it was a holiday. Still had a winning trade there. Here's overnight. And here we are right now. So here's what I say. If the price closes 2 consecutive closings above the Atlas line, long. And we may see it. As we go further, we may see it long. In the chart, I'm sorry guys, I didn't ever change this here. Absolutely right. It is the ES12. All right. Okay, so here is the December contract. Same exact situation occurred on the December contract. We have 2 consecutive closings. The December contract was 1164 entry. Right, I look down. What do I see here? I see 4, very similar. 1, 2, 3, 4, 1164. Market down, went down 1161, went down 1159.75. So I know that I got my 4 points. Had you have waited the entire for the entire 4 points. So it doesn't matter if you're looking at the December contract or not. Here is the currently the euro. Here's the Russell, crude oil. Igal, hopefully I answered your question. Sheldon, okay. Chris, thank you, Chris. Chris Burton. Mike says here, do you set the stop to a close on the outside of the outline? Actually, Mike, I have 3 stops that I use. Prove-it stops, catastrophic stops, and time-based stops. So the stop really depends on what the market is going to do. I can't wait forever for we may get a signal to go long here. Maybe here. Maybe. You gotta give it a couple more minutes to go long. So the stops really, Mike, depend on if price hits my catastrophic. If it closes on the opposite side of the Atlas line, that would be a good prove-it stop, as well as a time-based stop where the market is doing nothing, not hitting my stop or profit for a set number of bars, a set number of time. And so I would use a catastrophic stop, a time-based stop for that as well. And I teach this all. Okay, these are all things that I teach. Absolutely. Major says, can you use the price action signals like a break below, a close below of a previous swing higher low in the direction of the Atlas line? Absolutely. They're called Atlas line strength trades or Atlas line pullback trades. And basically, if you look at, let's take a look at yesterday here. This would be a Atlas line pullback to go long right there. Okay, we had a pullback, the first green bar that reascends the trend up. I'm going to go long there. ATR is at 2, 93, 95. There's 3 points there, so I know you got the 2 points. Igal, I try not to trade too much because I've never found a trader who trades 100 times a day more profitable than a trader that trades 3 or 4 times a day. So it's only really 3 or 4 times a day that I trade, and I can probably hit my target of 3 or 4 points daily. So I'd say 3, 4. I don't trade 10 or 15 times a day. Just 3 or 4 times a day is all you need. And I really prefer the morning over the afternoon. Egal. Alright. Alright, so what I'm going to do here, while this here is setting up, that we may get a long, and if we get a long, I'll place another trade here to the long side. And you're going to see the order appear live here. What I want to show you today, though, besides just pulling off some trades and showing you what the Atlas line can do, is I want to show you a way. It's that maybe you've seen this, me show you this in a couple of videos. The ABC pattern, which is a way to tell, it's a leading indicator, a leading way, a forecaster, to tell me whether or not the market is in a trend or not, and whether I can take trades based on that philosophy that we're in a trend. And so when I look at price, when I think about trading price, I like to break down the day into sections, okay? And so the first section is going to be what I call the A part of the day. Okay, and the A part of the day is considered from 9:30 all the way to the first 2.5 hours, 12 o'clock. All right, and so this is the A part of the day, right? The A part of the day is the best part of the day to trade. And I'll tell you why. What can I expect in the A part of the day, right? The A part of the day has the highest liquidity, has the highest volatility, and I can expect a move, whether it be a move up, a move down, but I can expect the market to go somewhere and do something. So I'm going to call this the A part of the day, right? Now in the B part of the day here, right? Everybody considers this lunchtime, but obviously it may be lunch for me here in Florida or for the traders in New York, but it's not lunch for those of you in Australia or in England or in Germany or in California. It's not lunch for you. So that thinking that it's lunchtime and you should stop trading is silly. Instead, the reason why the middle part of the day, the B part of the day, is so important is because typically the market, I could count on it whipsawing back and forth and staying within the confinements of the range that A created. So I don't typically think about B as continuing higher or continuing lower. I think of B whipsawing within the confinements of A, like this. All right. So this is what I see day in and day out 85% of the time. The market will just whipsaw back and forth within the confinements of A. And so let me show you a few examples of what I mean by that. All right, to clarify. All right, so take a look at, this is September 8th, and this is the December contract. So this is a little bit different, unless I go to I'm sorry, this is the December contract, but if I go to a September contract, it's pretty much the same. Okay, here we have 9:30 here. And we have here 12 o'clock. And so this is the range that the A part of the day created, right? Yeah. In the A part of the day here, I can expect the market to not go beyond, above or beyond this. I expect it to stay within the confinements, the B part of the day, of this range. All right? So this is B, and this is A, and this is yesterday. Okay? Now, when the market does something different, and actually this is the C part of the day right here. When the market does something different, meaning the market does something different. The market trades above or below B, and I'm sorry, the market itself trades above or below A. When it does something other than what it typically does, this is your leading forecaster to tell you the market is trending. Okay? So you can look back on a day and you can say, oh, I should have went long or I should have went short because it was a trending day. But how do you tell that as it's happening live. How do you look at that? As it's happening live. So really, the way that you do it is that you need to compare it to where it's previously been, but with rules, a set of rules. So Victor, B is from noon to 2:30 p.m. All right. You know, we have the room is filled to capacity. So if you guys exit the room, you probably will not be able to get back in. Just to let you know, because I'm seeing some emails that are coming in that the room is full. So I would just ask you to stay until you won't be able to get in if you guys log out. All right. So B is from 12 to 2:30. Okay. So let me show you what a trending day looks like and how we can capitalize on getting in bright and early. Okay. Take a day like September 7th. Everybody agrees, looking back in history, right? Wow, it was a great trending day. How do we catch it early on, right? How do we catch it early on? Well, look, we're above the Atlas line. All right, great. So I know that we should be going long and taking long trades. Take away the Atlas line for just a second. And let's just concentrate on price. 9:30 to 12 o'clock. This is the range of A right here. All right. Here's the range of A. Here. This is B. So did price close outside of the range of A? What do you think? What do you think, guys? Absolutely, right? Absolutely. That is your long entry right there. 2 consecutive closings above the range of A, right? So this is A. I can expect a trend, okay? As soon as price closes above the range of A, we have a trend in place, especially if it occurs as close as possible to noon, especially if it occurs nice and close to 12 o'clock. If it occurs closer to 2:30 when we have C now come into play, then I would say it's not as strong as if it occurred right within the first hour, half hour, hour. Now, if you take the same exact scenario, what we did here in B, and say, will price close in the C part of the day outside the range of B? And the answer is absolutely. So if it does that bright and early, I want you to expect the market to head higher and close higher. This is how we dictate early on if a trend is valid or not. All right? Let's take a look at what's happening right now. All right, so we have price flip-flopping on the Atlas line. We have it close above. We do nothing because it has to be 2 consecutive closings. So we do nothing. We have price close below. We do nothing. It's got to be 2 consecutive closings below. We have price go up. We do nothing. It's got to be 2 consecutive closings above or 2 consecutive closings below for a valid order to go long or to go short. This 2.5 hours is based on breaking up the day for the initial A part of the day, the B part of the day, which is noon to 2:30, and then from 2:30 to close is the C part of the day. Dan. It's based on breaking up the day into 3 sections. Okay, you're welcome. So if this specific candle closes above the Atlas line, you're going to see an order appear to go long, and a long trade should be taken on the E-mini. But we have to wait for price to prove each and every aspect of what we do. So I don't take any trades without valid proof, and I let price prove it. I don't let a stochastic or an MACD or a moving average two consecutive crossing lines or anything like that with two moving averages, I wait for price to prove it, always. And also for the stops, I wait for proof as well. All right, any questions, guys? All right, we'll see what happens there. About 2 minutes left here in this trade. Let's take a look at some other markets. Now, this ABC pattern that I'm showing you here has nothing to do with just the E-mini market. It's, remember, price is price. You can trade it on the currencies. You can trade it on the Russell, the DAX, whatever you want. Euro Stocks 50, as I like that market as well. All right. So just so you're clear that what I just showed you is not particular to just the E-mini S&P. Okay. So if you look at the euro currency here. Here's the euro. Short, short, short. We had one long that did not work. Everything else is short here. This is overnight. Oh, actually, this is yesterday. Sorry, September 8th. Here is overnight on the euro currency on September 7th. Any reasons for me to go short, guys? Absolutely not. Right? It's the euro. Here is the long on September 6th. Here, didn't go anywhere. Here's a long and short. Really didn't do anything. This long was probably a break-even trade till the end of the day. This short, you have to get out of it. Nothing happened here. As long as you follow the rules, it's mechanical. This is the holiday, Labor Day. Okay, that's last week. All right, let's see if we get an order here on the E-mini. All right. Sheldon, price action works with options. I'm not an option trader. There's a little bit more to options because there's a time decay. So price action does work with options. All right, so there's your long 1166.75, okay?
Order pending.
All right. So let's see what happens with that 1166.75 long. All right, on the E-mini here. All right, let's see what happens. Okay, with that, keep that off this chart. All right, any questions, guys? Here on the ABC pattern. Just out of the way here. Okay, so that's the order. Okay. All right. So let's talk a little bit about first come, first serve. Has anybody ever heard of, in electronic markets, this notion of first come, first serve? This is very important, regardless of what market you're trading, Forex, currencies, E-mini. First come, first serve. And a lot of traders don't know about this, but if you move your orders around,
Order filled.
All right, guys, I'm filled here. All right. If you move your orders around, if you move them around, you're going to always be placed in the back of the line. So the idea is to, when you place an order for a limit to get out with profit, keep it there unless you're ready to exit the trade. Keep it there unless you're willing and ready to exit the trade. Otherwise, there's no sense in moving it from 1168.75, 1169.25, down, up, down. Keep it there. Move the trades. Move it over only when you're ready to exit the trade. Okay. So I'm going to take this off screen here. So when I talk to traders, especially the mentorship guys that I have that I'm working with, most of them have traded and have some experience. Some are brand new. But remember, you always have something to learn, because mistakes that traders make are always the same. For example, when you place a stop, do you realize that about, 80% probably of traders place their stops, they all place them at the same place? They place the stops where it makes sense to them, sounds good, I should say, where it sounds good. So what does that mean? Well, if it sounds good to place a trade at 1200 or 1150 or 1220, 1100, these are round numbers, even numbers. That is not the area where you guys should be placing your stops. Place your stops not where it sounds right, where it makes sense. Okay? So here I am. Here. Let's see what happens here with this. And so when I talk to traders, they say to me they usually place their stops at round sounding whole numbers. All I'm here to say is you're doing the same mistake as every other trader when it comes to trading and placing your stops. Try not to place your stops at a round whole number where everybody else is, because you will be taken out. I've done it. I've taken traders out of their stops before, and other large traders, institutions, see it as well. They're going to do it, guys. Okay? All right, very good. Very good. A couple people took this trade. Excellent, guys. Wow, half of you guys took this trade. Fantastic. Excellent. All right, I'm going to hold it until I get filled.
Target filled.
There it is, guys. All right. So give me a reason to go long. I just gave it to you. 2 consecutive candles above the Atlas line. Gave me a long entry. Right? There's the reason. All right, so that's 2 trades for the day. Up, I don't know, 4 points, maybe 3.5, 4 points. I have to see what the statement says. But do I need to place another trade on a Friday? No, absolutely not. What reason do I need to continue on trading until the end of the day when I'm up in the morning? You got it, Pepe. Pepe wants to go over the ABC pattern, all right? You got it. Frank, excellent. Good job, man. Good job. Very good job. Can I share that with the class, Frank? Or with the webinar? Not a class. Yeah, sure. All right, I'll go over the ABC pattern. Just a second. Sure. This candle right here and this candle right here. It gave you this order right here to go long, Dan. That's right, Dan. As soon as we have 2 consecutive closings here. 2 consecutive closings, place the order to go long, right there. The short, I have it listed here. 1, Dan, right here. 1, 2. Oh, sorry, Jason. This double bar short, Jason, occurred because we had here 1, 2 to go short, period. Right? Doesn't matter if they're green or red. Okay. This double bar long here appeared to go long. This text here, that's the software provides to you, the orders, the signals, because after this candle closed, this appeared, and then you would go long. Jason, is that clear? On that? Candles, indicators to go short. All right. So it's 2 consecutive closings, no matter if they're green or red. That's the rule. Now, if you have 2 consecutive closings short, an order will appear to go short. Sheldon, is it your program that's telling you that you have double bar shorts or long, or are you just constantly watching it to see when they happen? Well, you can turn these signals on or off, Sheldon. So the program itself tells you. I don't have to be watching it, but I think that, and I teach you how the orders actually are managed and occur. I think that you as a trader should know and understand the orders as well. So if you're watching it, you can see that there's 2 consecutive closings or above or below, and you can place an order. Or if you want to wait for the software and you're not interested in paying attention, you just wait, and you can actually have an alert here as well. Show you here. I have a wave alert. You can have this alert wave 1 WAV to alert you whenever there's a sound alert, and you can turn these off as well, so you don't have to see them if you don't want to. See, I turned them off. I'll turn them back on. See? So the program itself gives you these. If you want, you can have an alert file to it. All right, Sheldon? Alright guys, I am going to show you the ABC pattern. Pepe wanted to see it. So let me show you, Pepe, the ABC pattern once again. Alright, Frank, there it is. There's your chat there that you put there. My major Mongo. John Paul, I'm very interested in learning price action. Personally, price is the best indicator, bar none. Now I'd be a fool not to take advantage of Atlas line, but fear it will hinder my learning to use price action alone. Is that a concern that you would have as a mentor teacher to a student? Not at all. I think the Atlas line is based off of price. We're using price to prove what we do. So it's a little bit different, major Mango. It's a little bit different, Mongo, I'm sorry. Not mango, Mongo. It's a little bit different. It's a little bit different when you rely on 2 moving averages to tell you when to go long or short. Everything that you're seeing here, I'm relying on price to prove to me whether to go long or short. So it's reverse, actually. I'm waiting for price to confirm whether I should go long or short. I'm not waiting for the Atlas line to cross, or 2 crosses, or above or below 20 and 80, or an MACD above 0 line. I'm not looking for the indicator to do something. I'm looking for price to prove itself. So remember, I'm only going short here if price dictates it. Okay, so the ABC pattern. So here's how it works, guys. Let me go back to this here. All right. Take, for example, Pepe, the A part of the day. All right, Pepe? It's from 9:30 to, I don't know why it stops more data here, but from 9:30 to 12 o'clock is the A part of the day. Okay? So the A part of the day is where I can expect some type of move. I can see it go up, I can see it go down. I can expect something, and it's the best part of day to trade is definitely the A part of the day. All right. Now, the B part of the day here, right? The B part of the day here. I'm sorry. The B part of the day, so this is the range of A. The B part of the day, as soon as it starts to plot, I have seen this 80%, 85% of the time, where B from 12 to 230 does, the price in B, I should say, does nothing. It stays and whipsaws within the range of A. This is what price does 80-85% of the time, and this is what I expect, except when it does something other than Pepe, when it doesn't do this, when it doesn't range within the, when price in this B part of the day closes 2 consecutive closings above or below or above or below the range of A. So now I'm going to move this into the future. Did we have in the B part of the day 2 consecutive closings in B? What do you think? Did this and this have 2 consecutive closings? No. We had it here, but now we're going into the C part of the day. This is the C part of the day. All right? And so, oops. Okay, so I want you to let price prove itself. So let me show you on a day that trended. And the idea here is to catch a trend early, as early as possible, with proof, price proving itself. All right, so here we have A, right? This is A. As B rolls along here, I'm looking for 2 consecutive closings above or below B. I'm sorry, above A, right? This is A. I'm looking for price to do something. If it just ranges within A, it's doing what it's supposed to, right? It's doing exactly what I expect. But when it does something else and breaks out of that range of A, now we have proof. Boom. Long. Okay, Pepe? There? See what happens. What do you think? Do you think that you could have caught this long here with proof for the trend? Yep. Now, let's take the same concept, the same idea, push it forward into the future. The B part of the day, everybody comes back from lunch, quote unquote lunch, right? We have late day rallies, late day sell-offs. If we have the same scenario occurring, long, right there. And the day will close higher. Okay, it will close higher. All right. But this only occurs in trending days, and I want you to be able to catch the trending days, whether it be a currency, whether it be, here's another day. This is September 6th, 9:30, 12 o'clock, 2:30, to the end of the day. Here's A. Push this over into the future, right? We have it here. We have it here to go long. Here's your trade. Take B. B part of the day is here. And say to yourselves, if price closes 2 above or 2 below B, late day rally, late day sell-off, you got your proof. Never happened. Based on what you've learned, you don't take a trade off the ABC pattern. No, it does not become support. Major. It does not become support. All right. All right, guys. I have right now, we have some traders who bought the Atlas line, and so I am going to start a webinar with them. Frank, you're one of them. You bought yesterday, right? You already grabbed 5.25 points out of the market. Very good. So I have a scheduled 11 o'clock class now. I was able to pull out not as much as Frank, but 3 or 4 points off of the Atlas line trades this morning. You guys saw it live. If you have questions, please email me. Support at Daytradetowin.com. My name is John Paul. You got it, Jason. Glad you could attend, man. All right. You got it, David. Stop loss and profit. I always take profit, Pepe, off of the average true range, the ATR, and I also recommend that as well when it comes to taking your stops. Use a stop off of the ATR, but it gets more involved, Pepe. All right, because I use 3 different stops. But with the ABC, I expect it to, when it closes above, I expect it to continue. It's a trend. It's proof of a trend. All right. The power price action, EJ. I haven't done one in a while. I will see if I can set one up for. Okay, you got it. I'll see if I can set one up for the next week or so for the power price action. All right. The power price action is a DVD course, guy, who you get DVDs and it comes with 8 weeks of training on the power price action. It's just price action. There's no indicators, and it can be used on Forex, any platform, Ninja, TradeStation. We're trading price. It's not overly complicated. You don't need a calculator. It's clean, objective, no indicators. It's an excellent way to trade just the price. So I'll see if I can have a webinar on the power price action. But it does come with 8 weeks of training with that power price action. All right? You got it, Pepe. All right, guys, have a great weekend. Enjoy the weekend. You got it, guys. Pepe, EJ, I'll go into more detail with the stops next time we meet, all right? All right, guy. Thanks, guys. Talk to you soon. Bye-bye.